I think right now, all the evidence that we are getting from the various insurance markets around the world is that proximity to the customer is becoming their sort of number one driver. If we think back over sort of traditional insurance business, points of contact with the customer have been, when you take the policy out in the first place, perhaps then when you subsequently renew the policy, or on a negative point, obviously when you have a claim or a similar event during the currency of the policy. So effectively, insurers can go from year to year really having no contact whatsoever with their clients. What is happening today is that a large number of companies in insurtech, sort of fintech for insurance as it were, are establishing themselves, and they are now trying to disrupt what I think you could call the value chain that exists between the insurer on the one hand and the insured on the other. And they are trying to put in pieces of technology, pieces of process in between those 2 points that make the experience better for the customer, that improve the way processes happen. But at the same time, what they really are probably doing is disintermediating between the end underwriter and the customer. And I think now underwriters particularly are moving very quickly to try and put in systems, to try and put in controls and processes that allow them to understand what their clients need, to understand what their clients want to buy, and to understand how their clients wish to be served. And from our perspective at Equinix, we fundamentally believe that the only way they can successfully achieve this is through digitization and through coming together as never before in a sort of digital network, so they can exchange information quickly, efficiently, and securely. And we believe that underlying that needs to be an architecture, if you like, that will enable this thing to happen. We call it the Interconnection Oriented Architecture, or IOA, and we believe that is a foundation upon which insurers can place software. Another way in which the insurance market is going to have to change is through the increased use of analytics. Now, again, if we look back at the sort of recent history of the insurance market, analytics is something that they have performed, there's no question about that. All sections of the market do it. It's tended to be focused on a couple of main areas. The first is with catastrophe modelling for natural disasters, where actually for probably 2 or 3 decades now, there have been systems available that have allowed insurers to model how much they should be charging, in theory, for a risk, to put in regulatory returns relating to those risks, and also to analyse what might be happening from a claimant's perspective should an event occur. On top of that, they've also, for probably an equal length of time, modelled capital, their use of money. Because unlike many normal businesses, insurers, of course, have to have 2 types of capital. One, sort of working capital, just to keep the business going, but secondly, they have to have regulatory capital, which regulators around the world insist on them lodging in order to allow them to trade. And so for a long time now, they've modelled on how to use those funds efficiently, how to get most use out of them. But what we're now seeing is a situation where through the increased amounts of information that are available, through things like the Internet of Things, IoT, vast swathes of data either are available already or are going to become available to underwriters. Now, this data can be used for a large number of purposes, ranging from getting to know the customer better, understanding their circumstances. It can be used to price risk better. It can be used for fraud detection. It can be used to ensure that the general service provided to the customer is better. Not to mention the fact that, of course, it's the precursor of things like automated vehicles, because telematics, the system whereby you pass driving behaviour information back to a central point, is effectively the starting point on the road down to fully automated vehicles. And that's going to be a very major part of the analytics arena. The final thing to say is that I think we're going to see increasing amounts of real-time analytics done, when people actually log on to, for example, get a quotation. That immediate analytics will take place, allowing quotes to be more thorough, allowing more quotes to be automated. And again, this is going to lead to this enormous increase in the data flowing around. And again, it's going to be fundamental that insurers, their partners, brokers, whatever, are interconnected digitally. So that they can consume this data, so that they can exchange the data. And again, this is where we feel that the interconnection-oriented architecture is going to play a very big role in allowing them to become more efficient and do more analytics as required.